Australian dollar is about flat against the US dollar over the past week, around 77 cents, although during the week it did reach 77.40, its highest level since November. The Aussie is trading very well against a range of other currencies. Commodities continue to lend support. Australia's number one export, iron ore, rose above $94 a tonne this week, fresh highs back to 2014. The price of Australia's number two export, coal, had been falling since November, but it got an unexpected boost this week. As part of UN sanctions, China announced that it would be imposing a temporary ban on all coal imports from North Korea. North Korea had been providing 12% of coal imports for China. As a result, Australia stands to benefit, and the price of the coking coal that is used for steel making that Australia exports has risen 12% this week. Australia's data calendar has been busy this week and not quite so helpful for the Australian dollar. Fourth quarter wages growth was 1.9% over the year, in line with expectations, but an equal record low for this series. Weakness is very evident in the mining sector and specifically in Western Australia. We also got reports on construction and business investment in the fourth quarter, and these reinforce the theme that the fall in mining investment still has a way to go. To be sure, there is an increase in residential construction helping to offset the fall in mining. But overall, fourth quarter growth, which is the highlight of next week's calendar on Wednesday, is shaping up as being fairly modest. Westpac looks for 0.4% growth in the quarter. That's 1.5% above the fourth quarter of 2015, but following the surprise negative 0.5% in the third quarter, it means that the Australian economy will have been essentially flat over the second half of 2016. But this soft growth performance hasn't been upsetting the Australian dollar, with the Reserve Bank out this month reiterating its forecast for 3% growth by the end of this year and also in 2018. Moreover, Governor Lowe testified to a parliamentary committee this week that market pricing for a roughly flat cash rate was reasonable to him. Also on Australia's busy calendar next week, on Thursday we'll get January readings on building approvals and the trade position. Trade should show another large surplus, which will reinforce the positive message for the Australian dollar. Globally, the focus is likely to be on US President Trump's address to a joint sitting of Congress on Tuesday. Stock markets are already around record highs, so they're pricing in good news. Bond and FX markets have been a little bit more mixed, so they'll be very interested to hear what sort of plans Trump has on infrastructure and tax reform. We expect this optimistic rhetoric on the US economy to help support the US dollar. Fed officials have continued to talk up the chances of a rate hike at the March meeting, yet markets are only pricing a 22% chance. The risks are surely that this probability rises over the next week or two, supporting the US dollar. With this in mind, the Aussie dollar is likely to run out of steam against the US dollar around the 77.50 to 77.70 area. We don't see much downside, however, on the week, and we do expect that the Aussie will continue to perform well on a range of other currency crosses. We'll speak to you next week.